Oil prices last week, just last week, prices were below $90 a barrel, but now they crossed $100 today to $100.10, that threshold moments ago. But what's going on here?
And how will these surging prices affect you, the consumer? Let's throw that to our Fox panel. Gary Kaltbaum, first to you. Of course, it does take a while for the high price of oil to whittle its way down to the price at the pump. But how soon do you think it'll happen?
Oh, I think probably in the next 2 months, usually about 8-10 weeks. I do want to make one point. There's all this talk about speculators causing this. Oil price in a bull market for many years now. Of course, there's speculators, but there is a real supply-demand problem. There is not enough supply, too much demand across the world. Of course, we have Peter's thoughts also on inflation, which I do agree with. There's a lot of things working here at the same time, and it's not pretty, and I think we are going higher.
Yeah, I mean, come on, Peter. How much longer can the government try and say that consumer prices, inflation, are within the parameters that are acceptable? Oil going this high. I mean, there's always the chance that you see that disconnect between crude prices and what you see at the pump, which we saw over the summer, but it doesn't seem like that may happen this time.
No. Well, remember, this isn't even an oil story. This is everything an inflation story. Oil prices are rising as the result of inflation. And the reason it's a global inflation is, we have a trade deficit of about $60 billion a month. So we're exporting $60 billion into the global economy. And the world, doesn't need this money because we don't produce enough products to export. So what happens is our trading partners sell these dollars. But what happens is foreign central banks don't want the U.S. currency to collapse. So they buy all these dollars with money that they print. So we print a bunch of money, we send it abroad, foreigners print a bunch of money. It's a money printing fest. As a result, prices for everything are going up, including oil. And oil is going to keep going up as long as the world is printing money.
Well, and Pat, we now have something crossing the wire here from the Bank of England saying that monetary policy can't stop rising short-term inflation. So indeed, once again, Peter is right, maybe not necessarily in degree, but at least in his sentiment. And the point is that inflation is a concern worldwide.
Inflation is a concern, and yes, there are parts of what we buy every day that are higher, but there are also things that I buy that are cheaper.
What?
My cell phone. The cost of operating my cell phone. My first cell phone cost me $2,000 to buy that actual phone. Now I'm picking up a cell phone for $50. All right. My monthly fee on my cell phone on that first go round was $500 a month, and I can't tell you, my calls were on one piece of paper. Now I can't. If I get my bill printed out, it's like hundreds and hundreds of calls, and yet my bill runs at about $120 a month.
Peter is like a child.
You have to the bathroom. You have some things that are higher and some things that are lower.
Go ahead, Peter.
No. Hold on. Consumer electronic prices have been falling for decades, for 100 years. Look at what happened during the 1970s when we admittedly had double-digit inflation. All types of things like digital watches and clock radios and all those things were falling in price. Television sets were falling in price back then too.
And housing is falling in price. Housing falling in price is also disinflationary.
But hold on a second. Again, let me just give Victoria a chance to chime in because
the cost of living is going up.
Victoria, you're from that part of the world where all these wonderful things are invented that do add to our productivity and that do keep costs down.
Sure.
But that doesn't stop inflation from here.
Go ahead, Victoria.
But I agree with Peter that, if we were buying our gas in euros, it wouldn't be so painful at the pump. Inflation is adding to higher fuel prices. But the Fed is in this tricky dance where they want to inject, liquidity into the market. They want to boost the American consumer, but at the same time, there's signs of real inflation. Rates are really low historically. So.
But Victoria, I wanted you to talk to Pat's point, which is the fact that productivity, the more that we get for the less amount of work, does keep inflationary pressures down, correct?
Yeah, that's a huge boost. Productivity adds growth to the market, and Silicon Valley is a shining testament that we're still in a productivity boom. I meet with companies all day that are inventing new ways to make workers more productive.
Quick, Peter, quick.
Productivity, when you have productivity, it helps hide all the inflation that the government is creating. Just because the free market is working to lower prices doesn't negate the government printing all this money and causing prices to rise.
Gary Kaltbaum, do you think oil is going above 100 tomorrow and is going to stay there a while?
I don't know about tomorrow, but I'm 100% sure it's going higher, and it's going to stay and go higher than that. I do want to make one point, though, that I think is vital here.
10 seconds.
For a year, Ben Bernanke said there was no subprime problem, and you see what happened. He better start acknowledging a possible inflation problem, or the bond market is going to tank and interest rates are going to skyrocket.
We all agree on that. Thank you, gang.
If you